Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I am Dustin. Happy Fed decision day. We are looking at NIO once again. And wow, oh boy, are things getting interesting here. And the reason I'll say that is because clearly if we look at this blue line, which is the price, things have been incredibly bad since the very beginning of August. That was the peak at $15.46. We essentially hit a bottom very recently at $8.55. And we are up today, ladies and gentlemen, up to $8.82. Now, if we look at the actual raw data, one of the things I like to point out here is that we are still three standard deviations below its 23-day moving average. You can see that blue lettering with the white background. That's what that means. You can see we're still below the 5-day moving average and the 23-day moving average. Now, if we look at the volume that we've seen over the past couple of days, we've seen well over 100 million shares traded the past 2 days. Yesterday, we've seen well over 200 million shares. Today being up only 3.16% on that kind of volume after being down 17% yesterday is quite concerning. We can look across the board. Essentially, we've flipped negative on the 5-day, still maintaining negative rolling return on the 15-day, the 1 month. We've now flipped negative on the 6-month rolling negative return. We would go short in the short term, intermediate term, and longer term. We are going to be fully across the board bearish as of tomorrow in the short term, intermediate, and longer term. Obviously, this may have something to do with NIO. It may have something to do with the overall dynamics. We look at what we see here. It is fascinating because we do see a rising bull, but that was very short-lived. We are going to be falling back down to the 10-week bullishness, which is not a great signal for NIO. Now, if we're looking here at the 2-day bullishness, you can see on the 2-day, the 5-day, and the 10-day bullishness, we were well below 38%, which is why we have that blue lettering with that white background. That was primarily based on the fact that we saw a gap down here at the very beginning of September, and then we moved slightly upwards before we had another gap down, which was yesterday. If we look at the trading signals, it's interesting because these should be essentially ignored. We're looking at rising values. We're looking at coming rising bulls. We've got some of these bull key 3. We can ignore those for now. We just look at the overall charts and the way the price is moving. Things are ugly in NIO land. This is not the time to own EVs. This is not the time to own NIO. This may be the time to sell all your shares, go short, and just kind of ride the wave because the momentum is bad, boys and girls. If we look here at the daily sentiment indicator, we can see that the daily sentiment, while it was rising up from that 38% back on 9/11, never forget, we are now rising back up above that 15-day moving average, but we have fallen back down again. We are at 43.8% for bullishness. Yesterday, we were at 44.4. We don't like to see it move that far down. We do want to see it move higher. Again, if we're looking at that volume, you can see how high the past 2 days of volume have been for NIO. They're the highest 2 days in the past 9 months. Well, not necessarily today, but yesterday was clearly 215 million shares traded. It was the highest amount of volume traded in the past 9 months in NIO on a day when it's down 17%. How many more signals do you need when you're thinking about that this is bearish currently? Things can change at any moment. I just like to talk about specifically what we're seeing in the data right now. Again, this is not financial advice, but I like to just point this out. Now, if we look at NIO and the daily volatility, you can see volatility has actually been falling. The past 2 days, though, it looks like it's kind of flatlined. It's gone from 4.283 to 4.271, and the correlation is starting to rise. So we'll be very interested to see now if this correlation is starting to rise, that the volatility is starting to flatline. If the volatility continues to fall and the correlation rises, that is a very, very bad sign. We'd actually like to see the correlation stay negative while the volatility continues to fall. That would mean that we're going to go sideways to up. If we look here at the range, obviously, well, not obviously, but if you understand the way that this is built, which I did build it, we can look here that when the range got really tight, that means volatility was very low. That's when volatility was very low and falling here in June. That's exactly when we're going to see that we had volatility leading up to June. That was very, very compressed. Now we had a big breakout in volatility. As we can see, a humongous hump in volatility, a big fall down, and a big hump again. That has led us to essentially what we've seen here, this hump, this fall down, this hump again, and now this complete collapse in the range size. The price is below the range, which is kind of nuts. We could expect that we could go up to $11.83. I don't know if we're going to go up there. If anything, we're probably going to be going, we're already down at the bottom. We would probably just kind of flop around for a little bit. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. We give you 25 stocks to your inbox every single Sunday. Stocks between $5 and $20 that are breaking out. Stocks breaking out to 1-year highs. Stocks breaking out to all-time highs. It is a great list to review to get your trading week started on a Sunday morning. I'll talk to you soon.